This week, the big story wasn't any single policy decision. It was the backdrop policymakers are having to navigate. And that backdrop still looks more like a slowdown than a breakdown. A few things stood out. First, the labor market. Job openings moved back up to nearly 6.9 million, while layoffs remain contained and the quits rate in a normal territory. Continues to fit the low-fire, slow-hire pattern we've been talking about. Second, housing is starting to stabilize. Pending home sales rose 1.8% in February, and builder sentiment improved in March. It's not strong, but lower mortgage rates are helping at the margin. Third, industrial activity is still moving forward. Production rose again in February after a strong January, and manufacturing still expanding modestly. Now, on the other side, growth has clearly slowed. Fourth quarter GDP was revised down to 0.7%, and core inflation still running just above 3%. So when you put it all together, the economy still isn't firing on all cylinders, but it's also not falling apart. And that distinction matters for investors. And in an environment like this, markets can move as much on shifting expectations around inflation and rates as on the economy itself. It's a good reminder that disciplined investing, less about reacting to every headline, more about staying grounded in the bigger picture. Thanks for tuning in. We'll see you next week with more insights.